Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Remember, anything said in this piece is an opinion only. Let's kick off. We're not going to have any more long introductions. Let's see what is driving markets and what will be driving markets going forward. Okay, so let's talk about China. Interestingly enough, China's index, this SSE, the composite index, gone up 2.5%. It's the highest level since November 2022. Remember, China's just coming out of a massive lockdown over 3 years. They've released all of the restrictions and the economy is beginning to pick up. The volumes and the activity in the business sector, you can see, are rising. Not only that, the Chinese government, the Chinese Communist Party, is pumping in billions into the economy to get it resuscitated. Why? Because it's going through a recession at the moment. The property market in China is absolutely trashed. It's been hammered. It's fallen such a level where people are not paying their mortgages or paying the rent or paying for completion of any particular property deal. So China is very, very interesting, and China pulled out the West out of the recession back in 2008, 9, 10 during the banking crisis. Now, could China do it again? So let's look at what the options are. So the options are either the US, Europe, or the Far East. And there's more chance of the Far East pulling the West out of an economic crisis than there is of America or of Europe. Now, there is a problem there, because if there's going to be massive fiscal stimulus in China and the Chinese engine, the Chinese huge industrial power starts to pump and starts getting moving, then there will be a rise in prices. Now, why would there be a rise in prices? On the basis of what? If the industry in China is doing well and it's producing and solving the supply chain issues, which is one of the factors that caused inflation over the last few years, why would inflation pick up? Because China needs the raw materials in order to feed its furnace of industrial production. So it's going to need oil, it's going to need copper, it's going to need palladium, it's going to need gold, it's going to need silver, it's going to need plastics, it's going to need all the raw materials that effectively are at the moment relatively cheap. And once China sucks in all of those raw materials, then the cost of commodities will rise, including oil. As those prices rise, that's going to have a kickback on Western economies, because Western economies also need raw materials. And if those raw materials are rising because China's coming out of the pandemic China flu lockdown, then that's going to have an impact on the West, and therefore you could see rising inflation throughout 2023. And I know many viewers are totally contrary to this, are totally against or totally oppose my view. Phil, for example, I know you oppose my view, say, why would inflation go up? Well, I believe that inflation will go up on the energy commodities and on the food sector as a result of China reopening its whole mega power industry. So therefore, you could have a feed into inflation. All right, that's China. That's a bit of the macroeconomics, what's going on there. Interesting economy. Keep an eye on it, because they could pull the world out of recession, but on the other hand, they could send inflation through the roof. Something to keep an eye on. Let's have a look now at the other markets. So equity markets in the US effectively were closed yesterday. However, they're ticking down today. The futures are ticking down, the Nasdaq, the S&P, and the Dow. European markets are more or less down to flat, or flat to down, depends. Bitcoin's had an interesting one, we'll come back to that in a second. So where's equity markets going to go? Equity markets are going to continue ticking down. They're well overpriced, and I've stated over and over again on this channel and on other channels regarding shares of the high-tech sector that are well overpriced, like the Teslas, like the Metas, like the Amazons, like the Google, like the Apples. Overpriced. So I expect Tesla to float down to about $140 a share. Meta, I expect to float down to well below $100 a share. I think that company is going nowhere, irrespective of the results that they produced in the last quarter. However, the high-tech sector is laying off a load of people. So there's a load of layoffs in the high-tech sector, and yet unemployment is dropping in the States. So where is that employment going? It's going in the service sector, hotels, leisure, flights, cruises, massively short of labor. So that sector is short of labor. The service industry is short of labor, and the high-tech sector has excess labor. So there will be more layoffs in the high-tech sector. Will those people be able to get a job? All depends what they were doing in the high-tech sector. If they were a truck driver, then obviously they get another job in the service sector. If there was some sort of coder, then they're going to have difficulty getting a job elsewhere if there's cutbacks within the high-tech sector. So that's regarding equities. I expect equities to continue floating down as interest rates and inflation rise. Moving on to Forex, FX, foreign exchange market, FX traders, this is what we've got. We've got dollar yen. Dollar yen is on the rise. So you're going to see dollar yen back at 140, 145 over the next 30 days or 60 days or so. Okay, those who missed out on the boat on dollar yen can catch it again. Pound, where's the pound going to go? All depends versus what. So the pound versus the dollar, cable. My opinion, the pound will creep up unless interest rates go up significantly, unexpectedly in the US, and that will give further dollar strength. But the pound is looking to go up, and any excuse, it will go up. The FTSE, for example, is at 8,000, just below 8,000 today. Again, the FTSE has been looking to go up, so a cheap pound is good value for the FTSE. Take that into consideration. As far as the euro is concerned, I see the euro going down because Europe is going into a recession. Okay, it's got high inflation, it's going to have rising unemployment, and it's going to have rising interest rates. Businesses are suffering there and they're struggling. So you're going to get a falling euro against the dollar. As far as Swiss franc is concerned, US dollar, Swiss franc, I expect the Swiss franc to gain in strength against the US dollar. Let's move on to the most interesting one of all, which everyone seems to be interested in, is cryptocurrencies. Okay, so Bitcoin is flirting with the 25,000 level. Remember, there's major resistance at 25,000. From there, it sank last week all the way to 21.5. It's back up there, 25, looking to see, can it test that upper level of resistance? If it breaks through, they'll probably go to 27, 28, 30 maybe, but then come all the way back down. Lack of liquidity, rising interest rates, high risk asset. It's not enough power in it to drive that particular asset forward. So I expect Bitcoin to float down and trade between the 20 to the 25,000 level for some time. However, throughout the year, I expect by the end of the year, within 2023, Bitcoin to be around about the $10,000 or lower. Okay, simply because rates will rise in the States and inflation will continue picking up. And as that does happen, you're going to have investors and traders looking for more solid returns. Moving on to bonds, I do see bonds, the US 10-year Treasury, the yield on that is running at around about the 3.85. You can expect that to move up to 4.5. The yield, as one of my viewers said, Dov, I said the price is 3.85 last week, or 3.83. That was a slip of the tongue. The price was not 3.83. The yield was 3.83. So I expect the yield to go up to 4.6 on the US 10-year Treasury, and the divergence between the 2-year and the 10-year to widen even further. And that is a clear indicator, lead indicator of a recession in the US. We are going to go into recession. There is a view we're going to have a soft landing. I don't think we're going to have a soft landing. I think we're going to have a really hard landing when it comes to that. When it comes to a recession. Okay, that's more or less it. Hopefully I've covered more of the points. Even though I'm a big short of Tesla, it doesn't mean I don't like Elon Musk. I love him, just the shares are overpriced. Those people who are following Tesla, and I know I'm going to get some comments. You can comment, subscribe, pass it on, share it, etc. Let's get the channel going. This is Mayor Valensky with Driving Markets. Have a good day.